The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we didn't end the week on a high note when it comes to the grains and oilseeds. Plenty of pressure seen on Friday's session, led by soybeans and meal, wheat, corn getting in on the action too. A lot of double-digit losses here across the grains and oilseeds. We continue to have a sharply higher U.S. dollar. We're going to take a look at all this. Let's run through the week in the trade. It's been a holiday week, of course, with no markets in the middle of the week, Wednesday. Let's run through it. Joining us now, Tommy Grisafi with Nesvik Trading and Ag Bull Media. Tommy, good to catch up with you. Happy New Year, my friend. How are you?
I'm doing well. I'm in Nashville. You're in Nashville. And, the markets are allowed to go down. We're finding that out. Extreme volatility hitting the grains. And I got to tell you, my friend, us broker analysts, whatever us guys are, chartists, we all look silly. If the market just goes up, the farmer says, why do we even need you guys? Monitor the risk. Why bother? We go up 2 to 3 cents every day. So the market took how would you say it? Took the stairs going up and the elevator coming down today.
Yeah, well, and thinking about this, I've noticed that the basis is starting to widen out a little bit. We had a good rally between Christmas and New Year's, now getting into the new year, heading into a weekend, of course. That can always add a little extra oomph to a move here. But I guess looking at this, it felt like we got up against some key resistance points in the grains, corn in particular. I mean, what's your perspective on the big pullback here to end the week Friday?
Well, it's really scary that the funds were adding to these longs this much. I'm really interested in seeing if it's later today or Monday, how long the funds are in corn. I've been telling clients all week, it's a strange week, part of last year, this year, listen, the funds are long. When the funds were a record short, we were at 380 corn futures. Now the funds are getting equally long. That's your chance to sell it to them. You really want to do that when when the funds are long. If you don't sell it to them when they're accumulating this long, then what are you going to do? Hope they get longer, right? And with any rains or even the sniffing of rain in Argentina, you see what happened in meal. And if those rains are confirmed, then we are a lot closer to having a big crop. Brazil's put them down for a whopper. And then all the scare recently was Argentina. And, the market goes up, market goes down. I got to tell you, Jess, with the announcement of that money coming from the government, that's the last time you and I did this, that's a very bearish thing. That's the government saying, we understand there's tough prices in agriculture. We're going to send you some money. So to me, that was a cue to get hedged up, to get protected, to get sold, and to start thinking about 2025.
No, very, very true. Very true. I want to throw this in here as well, thinking about the broader economy. Dollar index up near, over 2-year highs this week, 109. We've been seeing some concern about China's economy here, their stock market on Friday falling back a bit. I guess let's weave in this global economic picture here a little bit, Tommy. I mean, what are your feelings as we start off 2025? I guess I'm not getting a real rosy picture when I look globally at the economy right now.
Yeah, well, we've got a good idea that the consumers tapped out. We think the consumers tapped out by the amount of money they have on credit card debt. The other hidden gem of hurting people is insurance of every aspect: health insurance, auto insurance, anything on your farm. If you're a farmer or rancher, you have to notice that your insurance has absolutely exploded. I noticed it personally on homes, autos, personal health, everything else. We're raising our deductibles as high as we can. That's just like a tax that really hurts people. There's some optimism, but the election's over, right? There was a lot of pent-up energy. Who's going to win? We have a winner. The stock market rallied. It started to sell off at the end of the year. And now with inflation creeping back up, it could be a challenging time, not just for the American consumer, but for the world consumer. And you noted China, interesting numbers coming out of China. They're really struggling. And one of the things that's making them struggle, this is going to sound weird or awkward to talk about on your show, but childbirths. So with COVID, it's a natural thing. You and your wife had a baby last year. Congratulations. That's a very natural thing, and it's very good for the economy. And when babies aren't born, that really starts to do like what Japan did. Japan went through an awful cycle where they just weren't having as many kids. And so there's less consumers, less mouths to feed, less demand for everything. And so watch that birth cycle. China could be going through a really odd time. I think it's happening a little bit here in America. People are having maybe one kid instead of two or three. There's just less births, less people. One thing I'll note, I bought a car recently, and I bought my daughter a Volkswagen to go back to college, and they gave me 0% financing. And I didn't feel like I overpaid for the car. I understand that's the scam, right? Hey, we'll give you 0%. You're paying $3,000 too much for the car. I shopped it around. It was a very competitive price. So that's not something we've been able to talk about. So I kind of sound like I'm talking out of both sides of my mouth. There's inflation, interest rates. The Fed supposedly lowered them, but real interest rates went up. Yet the auto companies are offering 0% financing or low financing. So yes, those are some of those headwinds. Add that strong dollar. That's usually pretty bearish commodities. We'll see if they start to buy into it.
Well, thinking about all of that too, and kind of bringing it back to the farmer rancher perspective here a little bit, we got a key USDA report coming up on the 10th. That's always very volatile. A lot of numbers with that report. Thinking about this economic aid that's come through and just the overall inflation interest rate talk that you're mentioning there as well. I mean, thinking about, okay, it's a new year. Do we see that typical increased farmer selling here to try and take advantage of what this rally has been? Do folks wait and try to manage risk through the report? Is there still all this uncertainty with inflation, et cetera? I mean, what's kind of that risk management mindset? What does it need to be here this first part of the year, Tommy?
I think I'm smiling because I think you just asked me three questions.
I did.
That's something I would do. Okay. I have it all though. One note, let's go back a little bit. Risk management. Well, we're going to be kind of light trade on next Thursday before the USDA report. So very special note, if you're watching this, listening to this, President Carter's funeral, we need to honor him. He's United States president, died at 100 years old. So we're going to be open, but it's going to be a light day. Banks might be closed, stock market's closed, commodities are closing early. Then we have the report on Friday. So as far as risk management, yesterday was a great day, better than today. Today's a good day to get started again. And then Monday, Tuesday, Wednesday, we need to manage risk. Even if we also need to look at a chart and say, beans are down 18, 20 cents for the day, but they've rallied 50, 60 cents in the last few weeks. So you didn't sell the top part, but they're still well off the lows. Corn could be right back up within a few days with demand, et cetera. So we always want to sell the high, but the way the holiday fell, being closed on Wednesday, back open on Thursday, a little optimism yesterday, and then today, rain, South America, strong dollar, et cetera. And grains definitely went below one of the moving averages, and that got those technicals sellers going. So big money, not you and I, big money is off and running and trying to make yield for January. The CTA's funds, as far as cattle and everything else, extremely a big long position in corn and cattle, scaring the heck out of me. How you could just sit there and not get hedged up, protected, LRP, buy a put, some type of risk management. Futures options have risk. So does the market when it goes limit down, right? And so we had this cavalier approach on the farmer psychology. We had this cavalier approach of, what, when grains just gently go up, it makes you start to not realize they can have a day like today. And today's just a warning sign, because if we throw out, you talk to so many people, if we throw out a 93, 94, 95 million acres of corn planted, I mean, we're going to plant as much corn as the American farmer wants to. I don't think they're going to PP it unless we come into a weather problem or something. It's their goal to plant a bunch of corn. And if we trash the price, there'll probably be another government payment next year. So tying it all the way back to that government payment, that was the sign, the cue, the text, the email that tough times are ahead. Be disciplined and start setting floors. Quick note, it's January. We're going to discover price for crop insurance the whole month of February. You have this 2-3 month window where you really need to be, you as a farmer, you as a rancher, you have that fiduciary duty to hedge up this risk here, especially on the grain side, because we don't have federal crop yet. So I very much like getting hedged up, protected up, sold, and getting what you and I talk about, banker ready before this USDA report. Don't be the guy who goes in there and says, yeah, we rallied at harvesting beans, I didn't sell them. We rallied into Christmas, I didn't sell them. Oh, I need to borrow more money against my operating. I mean, they're not going to be impressed. And you're going to pay the penalty of 8% operating. So even good credit, 7, 8, 9% operating versus still making 4% in the bank. So let's turn commodities into cash. Easiest way to do that is to sell grain, buy a call spread if you want reownership. But I think it's time to start thinking about 2025, Jess.
Very, very true. Tommy, good insight as always. And folks, if they want to reach out to you, have a conversation there at Nesvik Trading, what's the best way to get in touch with you, Tommy?
Yeah, you can just go to the Ag Bull website, www.agbull. I got the A, G, and the bull over there. It's all behind me. Go to agbull.com. There's a QR code that's got all my new information on it. And down in Nashville by you, working with the good folks from Nesvik and enjoying every minute. Thanks, Jess.
You bet. Agbull.com for more. And again, we appreciate the time. Tommy Grisafi with Nesvik Trading and Ag Bull Media joining us here for market analysis today on Market Talk.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.